Hello, and welcome to the 720 Credit Score Challenge. Our mission is to provide you with a set of simple steps that allow you to dramatically improve your credit score quickly, stop being treated unfairly by banks and credit card companies, and start keeping more of your hard-earned money. In today's lesson, I'm going to talk about one of the most important things you can do to start rebuilding your credit score. Have 3 to 5 major revolving credit cards. When I say major revolving credit cards, I'm specifically talking about the following credit cards: Visa, MasterCard, American Express, and Discover. I'm not talking about retail credit cards. If you have credit cards that you can use only at certain stores, like a Home Depot credit card or a Gap credit card, they do not count towards the 3 to 5 rule. In fact, I recommend that you stop using retail cards entirely. You can read more about this in the PDF associated with this lesson. I'm also not talking about debit cards, even if they have the Visa or MasterCard logo. Of course, there's nothing wrong with having a debit card. Almost everyone has a debit card linked to a checking account, and this won't hurt your credit score. But it also won't help your credit score. So don't count your debit cards as one of the 3 to 5 revolving credit lines. Let's talk about why 3 to 5 is the sweet spot. If you don't have at least 3 active credit lines, the credit bureaus do not have enough information to analyze your spending and payment habits, so they can't accurately assign your risk level. From a bank's perspective, having no credit is actually as bad as having bad credit. You see, if you don't have enough credit, the credit bureaus will not have enough information on which to judge. They think, better safe than sorry, and they give you a low credit score. So remember, no credit is just as bad as bad credit. This is an important thing to remember, particularly if you have been through a bankruptcy, foreclosure, or another financial meltdown. Wiping your hands clean of credit is never the right move. Your score will never increase unless you have credit and use it responsibly. So if you don't have 3 to 5 revolving credit lines, listen carefully because I'm going to tell you exactly what to do. And if you have more than 5 credit cards, I'm also going to tell you what to do. If you have more than 5 credit cards, you have a better chance of getting in over your head and missing your payments. You have a greater chance of having an error creep onto your credit report. So those extra cards could hurt your score down the line. But if you have more than 5 credit cards, don't close the accounts. I'll explain this later. For now, just know that if you have more than 5 cards, you have to take specific actions to make sure that you are showing the credit bureaus that you are a responsible borrower. Okay, so let's take a look at where you are right now. Look at your credit reports and make a list of every credit card you have. Make sure you list all of your major revolving credit cards on which you are listed as an authorized user, and credit cards that you hold jointly with someone else, like a spouse. Now, let me clarify something. Sometimes people have high credit scores with just 1 or 2 credit cards. It can happen, but this is really risky. If you only have 1 or 2 credit cards, your behavior on these accounts will be scrutinized under a microscope. If you miss even one payment or if an error crops onto your report, your score will drop like a rock. Don't let that happen to you. If you have established a history of being responsible with 3 to 5 credit cards, then you will have a lot of deep roots planted in the soil. Your score will be a lot sturdier than if you only have 1 or 2 credit cards. What should you do if you have fewer than 3 credit cards? The answer is add some. Unfortunately, 46% of credit cards will have a negative impact on your credit score. 46%. In another lesson, I explain why this happens, but to make it easier for you to add credit cards today, we've done all the research and found the best credit card offers out there. We've identified the credit cards that will help your score, and I'm about to tell you where you can go to find these credit card offers. If your score is below 720, we suggest that you apply for secured credit cards. Secured credit cards are secured by deposits. You give the bank a deposit, and the bank gives you a credit card with a limit that is equal to, or in some cases, less than, the deposit. The deposit is applied only if you miss a payment, in which case your score suffers. Basically, you pay a deposit to get the card, then the bank holds the deposit, and you pay the bill out of pocket. You get the deposit back when you close the account or when the card is switched from a secured card to a traditional card. Obviously, traditional credit cards are better than secured credit cards. But if you have poor credit, you might not qualify for a traditional credit card. Secured credit cards require you to put up a little bit of money up front, but if you cannot qualify for traditional credit, they are a great way to build credit. So if your score ranges from 550 to 719, here is a link to some of the best traditional credit cards out there. www.720creditcards.com. You're going to find one subprime credit card at that link. I'll explain more about the subprime credit cards in a minute, but first, I want to give you another link, and this is for people whose scores are below 550. This link will take you to a page with our recommendations for secured credit cards for people with scores below 550. That link is www.720securedcards.com. Both of these sites have a list of secured credit cards which are great because they will help you build your credit score. Of course, there's a downside. You have to fork over a deposit up front. People in a financial crunch might be unable to do this. If you cannot afford to apply for secured credit cards, then you have two other choices. One, add your name as an authorized user to someone else's credit card, or two, apply for subprime credit cards. Now, I'm going to discuss these one at a time. In the PDF below this video, we have provided details about authorized user accounts. In short, an authorized user account allows you to attach your name to an existing credit card. The account holder assumes all responsibility for your action, and you benefit from the positive history and the positive standing of this credit card account. Obviously, you have to be really careful when it comes to authorized user accounts, and the account holder might be reluctant to add your name to his or her account. We've explained all the ways to safeguard both parties in the PDF associated with this lesson. For now, know that credit scoring bureaus recognize authorized user accounts only when the account holder and the authorized user are relatives, such as spouses, siblings, or parents who have the same last name and live at the same address as the account holder. Do not bother adding your name as an authorized user to your best friend's credit card. It won't do anything to help your score, and it might hurt your score if your friend makes a late payment or has a high balance. You should also know that you should only add your name as an authorized user to accounts that are in great standing. And as soon as your credit score hits 720, you should start applying for traditional credit cards in your own name. Being attached to someone else's credit card is always risky. If the account holder is not ultra responsible when it comes to finances, your credit score could be hurt so long as your name remains associated with the account. So keep checking your credit score and apply for traditional credit cards when your score starts to increase. This brings me to subprime credit cards. Subprime credit cards are designed for people with poor credit scores. They come with the highest interest rates and fees. They're expensive, so I suggest that you apply for subprime credit cards only as a last resort. If your score is under 720, you're better off applying for secured credit cards or becoming an authorized user than applying for subprime cards. But for some people, this is the only option. So go ahead and open subprime credit cards if you don't have access to an authorized user account and you don't have the money for a secured credit card. One of the credit cards at www.720creditcards.com is a subprime credit card, and it's called Barclay Card, Rewards MasterCard. This is the best subprime offer we have found, and the company might accept your application even if your score is around 580. Now, regardless of whether your credit cards are subprime, secured, or traditional, you will need to keep them active. But because subprime credit cards come with high annual fees, high interest rates, and low limits, you should make only small purchases on these cards and then pay them off each month. Fill up your tank of gas and then pay your bill in full. If you're going to open any kind of credit card, secured, traditional, or subprime, or if you're attaching your name as an authorized user, I recommend that you open all the credit cards you're going to open right now, this week. If you have two major credit cards, you need to open one more. If you have one major credit card, you need to open two more. And if you have none, you need to open three. A lot of people open them in stages, but this is a mistake. Each time you open a credit card, your account will drop for two reasons. One, a new credit inquiry will be added to your credit report. And two, the average age of your credit accounts will drop. Credit inquiries stop having much impact on your score in 6 months. And the sooner you open your credit cards, the sooner they will start to age. So why prolong opening accounts? It will just delay the amount of time it will take for your score to start climbing. Now, let's talk briefly about two things. One, what to do if you're married. Two, what to do if you have been through a bankruptcy, a foreclosure, or a short sale. In either case, there are some things you should know about opening credit cards. If you're married, you and your spouse should each have at least 3 credit cards, and you should not have joint credit cards. Let me repeat that. If you are married, you should not have joint credit cards. I talk a lot more about this in another lesson, but for now, know that you need to make a plan to get rid of joint credit cards and replace them with cards in your name only. If you have joint credit cards, simply call the credit card company and ask how you can switch them into one spouse's name. And be sure that you and your spouse both have at least 3 credit cards that are in your own name. Now let's talk about people who have been through a bankruptcy, short sale, repossession, or foreclosure. We talk more about financial meltdowns in other lessons, but quickly, here's what you need to know. After a bankruptcy, you need to open 3 major revolving credit cards. It is important you do this immediately. You need to show the bank that you have turned over a new leaf, that you have recovered from the bankruptcy and are now using credit responsibly. And for those of you who have been through a foreclosure, repossession, short sale, or other financial meltdowns, like a judgment or a tax lien, make sure you read the PDF under this video because your situation is a little more complex. Regardless of what kind of meltdown you have been through, you probably will not be approved for a traditional credit card after a major financial crisis, so apply for secured cards at www.720securedcards.com. If you're married and your spouse's credit was damaged due to the bankruptcy, foreclosure, repossession, or short sale, make sure that your spouse also reestablishes credit by getting brand new lines of credit. One more thing about bankruptcies. Different state and district laws might place restrictions on people who have declared Chapter 13 bankruptcy. Some districts don't even allow people to apply for new lines of secured credit until the bankruptcy has been discharged. To make sure you're following the laws, call your bankruptcy attorney before opening a secured credit card. Your attorney can tell you whether the new line of credit is allowed in your area. Next, let's discuss what to do if you have more than 5 credit cards. I told you earlier that if you have more than 5 credit cards, your score could suffer because the credit scoring bureaus will see that you have a lot of opportunity to overextend yourself financially. If you start missing payments or have high credit card limits, the credit bureaus will probably respond more severely if you have more than 5 credit cards than they would if you have between 3 and 5 credit cards. Your score could fall faster than it would if you have 3 to 5 credit cards. Now, having more than 5 credit cards also increases the odds of having an error on your credit report. So after watching this video, you might be tempted to close credit cards if you have more than 5. Resist this urge. Most experts agree that once you have opened an account, you should not close it as it will never help your score and it might hurt your score. Part of your score is the average age of your credit card accounts. Each time you close an account, you run the risk of lowering the average age of your accounts. So don't worry if you have more than 5 credit cards. As long as you follow certain protocol, your score is going to be just fine. Follow these tips to let the credit bureaus know that you are properly managing your multiple credit card accounts. Choose 3 to 5 credit cards that you think are helping your score the most. These might be the credit cards that are the oldest with the highest credit limit or the credit cards that you have consistently paid on time. Keep these cards active by continuing to charge on them monthly. Let the extra cards go inactive. If you have cards that you opened in the last 2 years, they probably aren't helping your score as much as the ones that are 6 or 7 years old. So stop using them. This reduces the potential of an error being added to your credit report, and it tells the credit scoring bureaus that you are responsibly managing all your credit cards. Pay the bills aggressively and stop using these extra cards. Never miss payments. Because you have more than the ideal number of credit cards, if you make a late payment, your score will drop faster than someone with only 3 to 5 credit cards. For the same reason, keep your credit card limits below 30% on all your cards. Okay, as a recap, here is your assignment this week. 1, count the number of revolving lines of credit that you have. 2, if you don't have at least 3 revolving credit cards, open some. Use these websites to find the best offers. Credit cards for people with FICO scores that range from 550 to 719, www.720creditcards.com. Credit cards for people with FICO scores below 550, www.720securedcards.com. 3. If you have more than 5, keep the top 5 cards active, but keep the balance as low as possible. Never miss a payment, and let the extras go inactive while paying the balance as aggressively as possible. One way or another, stop using your retail credit cards. These will never help your credit score, and they could hurt your credit score. Don't close them. Instead, just let them go inactive. I have two more things I want to tell you before we end today's lesson. Every time you apply for credit, your score might drop a little. If this happens to you, don't worry. After 2 to 3 months, your score will start to climb. As long as you keep the balance low, pay the bill on time, and follow the lessons I'm sending you, then within 6 months, your score should be higher than it was before you had the credit card. The last thing I want to tell you is this. When it comes to credit limits, size does not matter at all. $30,000 limits are treated no differently than $300 limits. So long as you use the credit card responsibly, which I will describe in other lessons, your score will begin to increase regardless of whether you have a low limit or a high limit. In closing, you must always remember that a high credit score is a powerful tool that can help you live an easier life. It is not a reflection of who you are as a person, but raising your credit score is the single best thing you can do to protect your cash, your family, and your financial future. Therefore, be sure to take each lesson seriously, complete every task, and follow the plan exactly as outlined. In doing so, you will take full control of your financial destiny.